Hey guys, it is Teach Me Tuesday. Here is a question for you to ponder. If you could have an extra $500 a month, right, that you could save, would you put that money towards paying off your mortgage? Or would you figure out a way to reinvest it so that you can put it in the market and make some more money? So, this episode of Teach Me Tuesday is all about that. It's all about should you pay off your mortgage early or should you reinvest? So, guys, let's get right into it because many homeowners right now are wrestling with the choice, especially if you already own a house, like I said, whether you should have the peace of mind of not having a mortgage
Hmm.
or should you find a way to leverage that mortgage so that it can, build more wealth for you in the future. I think this one is going to be based on just personal preference. I know, like for myself, people that I know, like take my father, for example, like his goal was to get rid of the mortgage. He doesn't want a mortgage. He want to be debt free. He prefers to just pay it off and then invest after he pays off. So I don't know, Wilma, what do you think? Do you advise your clients to pay off, their mortgage as quickly as possible, or just can kind of keep it going if they can and then put that money somewhere else? What do you think?
Oh man, that's a really good question. And because I feel like it's different for different people, depends on where you are in life, you know. Like you said your father, right? Thinking about him, I'm assuming he's m- mature gentleman.
Yes.
Um and he's living that life, just trying
Yeah.
to, relax, not try to, hustle and bustle no more like that.
Mhm.
Retired people. I think about my mom and my dad, and I probably would lean towards, hey, just paying off the house.
So
One
would
of
you think
my
it's more of an age thing? So is this based on your age? So you think if you're kind of the baby boomers and older generation versus like your millennials or something like that, do you think it has to do with age?
I I think so. My
Okay.
personal opinion, I believe towards the latter part
Okay.
of
Yeah,
life, I would want a paid off house. I wouldn't want to risk, be very risky in that part of my life. You know what I'm saying?
yeah,
As far as, hey, let me see what I can do in the markets, you know what I'm saying, with this money, man. I want to put it towards something that's more stable, something
yeah.
that's more guaranteed,
Mm,
and why
I agree
not
with
pay
that.
off your home? Yeah.
Yeah, I agree with that as well. I mean, I think the closer you get to retirement age, the you're now looking at being on more of a fixed income in most instances. So
Mm-hmm.
if you can be on a fixed income and not have and have as little bills as possible, um,
Mm-hmm.
the better off you are at being able to live, in your latter years. Now that's not to say that you can't have some money to have, take some money to create other opportunities to help drive more income in your retirement years. But if that more income isn't offsetting, the bills that you currently have, such as a mortgage that you probably could have paid off sooner, then I'm team pay off that mortgage first. Use that if you ever because I'm not to get into all these technical terms, but an amortization schedule in terms of how your like principal and interest is being applied for each payment
Mhm.
that you make. And when you every time you overpay or you make an overpayment towards you lower the principal, it changes that schedule. And and if you pay a significant amount, even if it's only like $200. I know we talking about like $500 right now, but I know when we even did like additional $200 on the shop, I think when we were looking at our mortgage, I think
Mhm.
it cut down over the period of 30 years over the
It
life
does.
of our loan. It cut down almost $30,000 in interest
Wow. Wow.
just by paying our mortgage a $200 additional payment each month.
Mm-hmm.
Um, so yeah, man. I mean, that's a big factor. I mean, you
Yeah, I mean, so
saving.
that's a great point, Gab, right? Because I think about something as both of you guys were talking, and I think both of you guys kind of hit on the same thing about age, right? I think for a younger person, like take us, like we're millennials, right? So for the millennial generation, I don't think our main focus right now is to be mortgage free. I think that will be a goal of ours sometime in the near future, but right now, I think we're more in the wealth building phase of life.
Right.
We're trying to
Right.
figure out how to get to a point where we can retire at 45, 50, is the goal or something like that, and not have to be necessarily tied to the, like you said, hustle and bustle. But when we talk about the emotional factor, perhaps, of owning a home and not having that debt, I think this is my personal opinion as well. I do think the older generation may have different feelings towards that than some of the younger generation may do, because from the psychology of it, I think a lot more people are not maybe buying a house as quickly because they don't want the stress of being committed to paying something and having that responsibility, even though it may bring stability to their life. So
Mm,
they may have
mm.
different emotions when it comes to, trying to quickly get rid of a debt versus, keeping that debt around just to continue to build, like leveraging owning a house as a way to gain wealth.
Yeah.
I totally agree. I totally agree as well. It's like, but let's talk about that.
Hmm.
Us, I'm in my late 30s, right? And I've had that conversation with my mentor. I've had that conversation with some people in my church. We did the Dave Ramsey program that he
Mm,
has,
Okay.
and I do believe in his program. It focuses on paying off debt, getting debt free. And one of the people that was in that program, actually the guy that was teaching the class, man, he told us the freedom he had when he
Hmm.
sent his last check to the bank to pay off his house. And it was that word freedom, at that point. And now, on that next step is for them to really heavily invest in whatever they want in order to build that wealth.
mhm,
So it just depends on where you are in life, I feel, age or what. So, but also, some people say, well, man, I can take that money and throw it towards my house, or I can take that money and throw it into the S&P, you know. But you can also take that money and invest it in the SME, you know. So you can take that money and really like figure out who am I trying to become, you
mhm,
know. Invest in your future, invest in more education to kind of better prepare you for, hey, to earn more, or to build that business, or to create a vehicle so you can build wealth. So it's a lot of different avenues I feel like we can do with our extra money, that, hey, maybe not paying off a house might not be first priority right now, you know.
mhm.
So here's a
Yeah.
here's a good point too. And I was looking over some of our like talking points for today's topic. One of it points out the ability to have like cash accessible versus building home equity, right? Because I think that people need to understand the pros and cons and the benefits of both. I had this conversation with someone not too long ago where they were asking about home equity, and so this particular client of this person that I knew, he said that his client didn't understand. They thought that equity was cash value, right? Because they listened and watched different things, and they understood that this equity is cash. It's like my personal savings account. But what they didn't understand was how they access the equity in their home. They
Mhm,
thought that they could just go up to their bank and say, "Yeah, I just want some of my equity. Can you cut me a check?" And they could
Mm,
just get it. And so the person who was talking to them had to explain to them, like, yes, it is cash value. Yes, it does have a monetary value, but it's not accessible that way. Like you just can't get it that way. So you would either have to borrow against the equity in your home in order to leverage any of that financial ability that it can bring to you building wealth, or you would have to sell that property and get the cash value that way. Versus if you physically had the money available to invest, that's different. So I wonder what you guys think about that. Do you feel that equity is a great tool to help people leverage building wealth, even though the way that you access it, you have to kind of sort of get in debt in order to get it, or you have to sell your or get rid of the debt to sell your home to
Well,
get it? What do y'all think?
yeah, no, I mean, I think it's a benefit. I think anytime where you can borrow money from your, in a sense, from yourself,
Hmm. That's a good way to
um,
look at it.
to purchase something else that's going to bring about value to your life or wealth, to your life and to your family. I think it's definitely worth utilizing because it's simple. It's a simple play on debts. Like um, you wouldn't be able if you didn't have access to the equity inside of the home that you own. You may not have financial means to have enough money to purchase something else, to purchase an investment property, or to you'll have to go out and get a loan, for that if you can qualify for one, a personal loan or something. And then interest rates are higher, and it's not something that's easily accessible in some instances. Whereas you can go get a home equity line of credit and have easy access to that because you can get easy access to the equity in your home multiple ways. Cash out refinance to where you change the terms of your existing loan, and you take out up to a certain value the money that you had, the equity that you have in the home, or you do a home equity line of credit to where, hey, you have a $50,000 line of credit. You can use that. It's easily accessible when you need it.
Yeah,
So
I mean
I
that's a good
think it can go both ways.
So that's a good point. So what I'm hearing you say is probably it's if you had to make a choice, it's better to borrow the money from yourself than to try to borrow it from either like a standalone personal loan or something like that.
Yeah.
So what do you think? There's a lot of your clients, especially whether it's your sellers that probably already owns a home or maybe your investors that own multiple homes, do they typically try to leverage the equity that's in their homes to make that money work for them in some kind of way? Or do they feel that the safer option is to just sell versus borrowing against their house?
Yeah. So this is what I'm hearing, guys. This is another level in I want to call wealth talk. Okay.
I like
Because it's
that.
like
Wealth talk.
this,
Ooh,
this is a
might need
this
to
is a
take
conversation
that.
I hear a lot of my savvy investors. They're utilizing, they're leveraging their assets, right? To be able to purchase more, to invest more, to gain more properties so that they can create a bigger cash flow, right? That's their game that they're playing right now. Being able to utilize assets in order to create a bigger, what I hear Grant Cardone says this a lot, a bigger drip per month,
Mm.
right? So you always want to have that cash flow coming in, and the more you build more assets, you can create a higher flow of cash flow. All right. Now I will say this: one of the beautiful things about real estate is it has a lot of benefits and it's considered an asset, right? When you purchase it and it creates cash flow for you, or you purchase it and you're able to put and build equity. I heard this guy, I don't know, y'all might have heard of this guy. His name is Aristotle, right? I don't know if you heard of him. He's a stock guy. He's an investor. I mean, young brother, just doing well. And one of the things he's doing, man, is he's not he said he was talking to one of his mentors, and his mentors was like, man, why you got so much cash in the bank? It's like he had like, I don't know, 5-10 million in the bank. He's like, man, I got, and he was talking just like this, man, I got bands in the bank, I got this and that, and his mentor didn't even have that much cash in the bank. But
Right.
guess what his mentor taught him? He said, hey, you might have that much cash in the bank, but guess what's happening every day? It's getting devalued every
Mhm.
single day because of inflation.
Mm-hmm.
And when you put that money in an asset like real estate, guess what's happening? The real estate market is continuing to increase in value. So you
Mm-hmm.
still have the net worth. Okay. Your net
Great.
worth is actually increasing,
All right.
even though you don't have the cash just sitting there in the bank. You know what I'm
Yeah.
saying?
Yeah. Yeah.
So
And
it's a higher way of thinking about money that I feel like we need to have more conversations about, because it's not talked about a lot. Because we're buying liabilities a lot and not buying assets.
All right.
So
I love
Yeah.
it. So
Yeah. I
before we
mean, a
wrap
lot of
up,
people
were you
don't
going to say
think.
something, Gavin? Go
Yeah,
ahead,
a
sorry.
lot of people don't think about, how, yes, you can have money and have it set to the side, but again, it loses value over time. You're saying, even just think about it. You're saying $100 today isn't going to take you as far as your $100 tomorrow. The reason being is
right,
because guess what? Eggs are going to cost more.
right,
Milk is going to cost more. So
Right.
right,
you're able to afford less with that same amount of money.
right,
So it's best to, invest that into something that constantly grows that money, that increases that money, and
right.
returns an investment on that money for you. And that's what, I mean, we all know that's what real estate does.
Mm-hmm.
Yeah. So
Absolutely.
before we wrap up today, while you were talking, Wilmot, and even when you were talking, Gavin, as well, it both kind of hits on this. So I'm going to leave you guys with this question I want y'all to ponder, because I think people have mixed reviews or mixed answers to this particular question. So when you purchase a home, right, because you said real estate is where people should invest, put that money, park it somewhere. When you purchase a home, is it an asset or is it a liability? Some people may think that it's a liability because you're taking out a mortgage. Like, I'm in
Right,
debt, right? I went in
right,
debt to get an asset.
right.
Or is it an asset because of the equity, the cash value, the wealth that it can bring over time? Who
Mm-hmm.
knows? We'll talk about it maybe one day next week
Yeah,
or
that's
in
a
a
good one.
future episode. Is
She's
it an
trying to do a
asset? Is it a
we got
liability?
cliffhangers now, people. We got cliffhangers.
So you
That's a
guys
good
have a
one.
great week. We will see you guys next week as well.
All right, cool.